Good morning. This is Richard Capps in Chicago with some on the markets. Today is Wednesday, June 2nd. The stocks have opened higher this morning. Their Dow's up around 75 to 80. S&P's up 10 and the Nasdaq's up about 19 right now. The dollar is higher against all the major currencies. Crude oil is up about a half a dollar, and gold right now is up about $2 or $3 to 1907. Stocks are modestly higher today as they open, and there are really two schools of thought on the stock market right now. One is the bulls in the market. They believe the economy is in good shape as it emerges from the pandemic and continues to emerge countrywide, and that this will be reflected in higher stock prices. So they continue to be bullish on stocks. The also Treasury yields are higher. They're anticipating the Fed to start tightening. The other side, from the bulls, the other side, I won't call them the bears because they're not bearish, but they're, let's say, more cautious. They believe the economy will continue to grow, but they expect the Fed to succumb to inflation pressures in the near term. And that could be a little bit negative for the stock market over the immediately following that. Should the Fed start increasing inflation? Both sides are basically bullish in here. What both sides really want is more direction, and they're looking ahead today to Friday's employment report, which will show the number of jobs created in May. Right now, the market's anticipating that the non-farm payrolls on Friday will come in at 266,000 jobs, which is a big drop from last month. Tomorrow we have the ADP report come out, which is generally an indicator of what the non-farm payrolls will be, and the ADP report is looking for approximately 680 some thousand jobs. So if that's closer to the number than the market estimates of the number of jobs created, I think we could see the market find some strength. So the key will be, as I said, the non-farm payroll Friday morning, and as I said, 266,000 jobs are in the market. I think the stocks are probably going to continue in the trading range today and tomorrow, with maybe some profit taking tomorrow before the close, but so we'll see what happens. And the dollar is up against all the majors. I think one thing, the sideways direction, the modest growth in stocks is helping the dollar in here. It's providing some direction to the dollar. Also, I think the currency markets could be casting a vote for higher interest rates, or anticipating higher interest rates, which would be bullish for the dollar going forward. Charts look like the dollar could be making a bottom in here versus some of the other currencies, so we'll see what happens. I think we will see the dollar higher today and tomorrow. In the crude oil markets, a number of factors contributing to higher oil prices. First of all, OPEC Plus, its partners, its non-OPEC partners, are forecasting continued increased demand for oil, and that's one of the factors contributing to higher oil price here. Second, there had been talk of increased Iranian oil exports if the Iran nuclear deal gets back on track. That does not look like it's going to happen in the near term, so as a result, there's less anticipation of more Iranian oil exports over the near term. So that's also a little bit bullish, continued bullish for oil prices. And then over the weekend, OPEC and its partners, they voted to increase production, or put the rubber stamp on increased oil production beginning in July of some additional 800 and some thousand barrels per day. That's I'm not sure why that is contributing to the bullishness, but I guess that's in the market, and as a result, the market's reflecting all these things. I think the main factor that's pushing oil prices up in here is momentum. We've got a bull market, and everybody likes a bull market, and as a result, it's going higher. We'll see if these fundamental news coming out will continue to support it, or start giving it some indication to sell. But I think basically oil looks bullish right now. It'll probably continue higher, but be cautious if I was long. In the gold market, gold is trading just above 1900 in here. 1900 is some pretty good support. It's basically up on momentum. There's no real solid factors. We got higher treasury yields, and fears of higher interest rates from the Fed. All that would be negative for gold. So basically, I think gold is simply trading on momentum, and we could see a sell-off if some of these other factors, such as higher oil price, higher interest rates, come to pass, and we could see a sell-off in gold. But right now, there's good support at 1900, and it looks like it'll continue to move higher. And that's all we've got today. That's the big numbers. Friday morning, non-farm payrolls, 7:30 Chicago time. So we'll talk to you again on Friday. Thank you.